What is a home appraisal and why do you need one? Hello, I'm John Thomas with Prime Residential Mortgage to cover everything you need to know about the home appraisal process. The home appraisal is required by your mortgage lender so we can determine the value of your home compared to the sales price. The home appraisal is ordered by us, the mortgage lender, through an independent third party called an Appraisal Management Company, or AMC for short. The AMC will assign a licensed appraiser to take the order. The mortgage lender and the borrower are not allowed to know who the appraiser is prior to the inspection of the home and the completion of the appraisal report. This rule is to ensure that the lender and the borrower do not try to influence the appraiser's opinion of value. The appraiser's opinion of value on the home appraisal report is called the fair market value of the property. What is involved in a home appraisal? Having an idea of what is involved in appraising a piece of property can greatly help in maximizing the appraised value and avoiding costly delays and re-inspections. The appraisal process consists of several steps. The following are the major steps in the sequence normally followed by the appraiser. Step 1. Research the subject property as to size, bedrooms, baths, year built, lot size, and square footage. Step 2. Gather data on recent sales in the subject neighborhood. The appraiser needs to locate at least 3 and preferably more similar size homes which have sold and closed in the neighborhood. The homes need to be within 1 mile of the subject property and sold within the last 6 months. These homes are considered the comparable properties, or comps for short. Appraiser is also to find at least one home that is currently listed for sale. Now, step 3 of the process is a field inspection, which consists of 2 parts. First, the inspection of the subject property, and second, the exterior inspection of each of the comparable properties which have been selected to estimate the value of the subject property. What happens at the property inspection by the appraiser? The subject property inspection consists of taking photos of the street scene, the front of the home, the rear of the home, which may include portions of the yard. The appraiser will make an interior inspection for condition, noting any items that would detract from or add to the value of the home. He will also draw out a floor plan of the home while doing the inspection, and he should be taking measurements of each room so we can calculate the square footage of the property. What happens at the inspection of the comparable properties? Well, the inspection of the comparable properties is limited to an exterior inspection. For features which cannot be seen from the street, the appraiser has reports from the Multi-Listing Service, or MLS, county public records, and the appraisal files, along with other sources to help determine the condition and amenities of the comparable sales. After the field inspection has been completed, the appraiser must determine which comparable properties most resemble the subject property, making slight adjustments in value for any differences between them. After making the required adjustments, the appraiser must go through the reconciliation process with the 3 comparable properties to determine a final estimated value. This method of estimating value is called the direct sales comparison approach to value, and it accounts for nearly all of the consideration in determining a value of single-family homes. It is important to consider the appraiser will be taking photos of the street scene and of the front of the subject property. The street scene gives the lenders some kind of ideas as to the type of neighborhood in which the home is located. The photo of the front of the home gives the lender an idea of condition and its curb appeal. And lastly, a photo of the back of the home and part of the rear yard is taken. Many homeowners don't take care of the rear portion of their homes and backyard, so this reason the rear photo is required. How does the appraiser assign a fair market value to the property? The appraiser will review 3 to 4 homes that have recently sold that are most similar to the subject property and are within 1 mile radius to the subject property, if at all possible. The appraiser will look at 4 main features of the home and make adjustments to the value accordingly. The 4 main features are: number 1, square footage of the home and lot; number 2, appearance of the home; number 3, amenities that are in the home; and number 4, the condition of the property. The appraiser will perform the following functions while at the home performing his appraisal inspection. Number 1, he will check the condition of all major systems and structures in and around the home, such as the HVAC and the roofing. Number 2, he'll determine any required repairs to bring the property up to minimum standards for the mortgage loan program that you have applied for, such as FHA, conventional, VA. Number 3, he'll review the property for any termite damage, water damage, or mold damage. Number 4, he'll make sure all the plumbing is working correctly, such as toilet, faucets, showers, and tubs. Number 5, he'll check the square footage, number of bedrooms, bathrooms, and room count to make sure it matches the county records to ensure the accuracy. The home appraiser will use all this information and complete a home appraisal report and assign a fair market value to the property. What is an appraisal reinspection? Well, if the appraiser identifies any required repairs to meet minimum property standards for the mortgage loan you're applying for, then a reinspection will be required. The reinspection requires the appraiser to make a second trip to the subject property to verify that the repairs that have been identified have been completed. There will be a fee charged to the home buyer for this reinspection, and it is the buyer's responsibility to pay it unless it is negotiated between the buyer and the seller for the seller to pay for the reinspection, and this must be done with an addendum to the sales contract. The typical cost of a reinspection is anywhere between $150 and $350 depending on the area where the subject property is located. The appraiser will submit a report to the Appraisal Management Company, which will be passed on to the mortgage lender, and it will certify if all the repairs have been completed when the appraiser does the reinspection. If the appraiser does not sign off on all the repairs being completed, he will note what is still outstanding, and a second reinspection bill will be required at a cost of between $150 and $350. And again, this is the buyer's responsibility to pay unless it's negotiated with the seller. This means it is imperative that someone verify all repairs have been completed before the reinspection is ordered. What happens if the home appraisal is low? Well, if the appraiser issues an appraisal report with a fair market value that is less than the purchase price, then the seller can dispute the appraised value. The seller, through the listing agent, can provide up to 5 comparable home sales that were not used in the appraiser's report that they believe would support a higher purchase price. The comparable sales are submitted to the mortgage lender, who will then start an appraisal dispute process with the AMC. The Appraisal Management Company will review the comps to make sure they meet the guidelines for comparable sales that may be submitted. If they do, they will send them on to the appraiser to ask him to review these new comparable sales. The appraiser will review the comps and determine whether they are good comparables and add them to his report and then adjust the fair market value. Or he can reject the comparable sales that are provided, and in writing he will respond as to why he did not use them and did not adjust his fair market value based on these new comparable sales that have been submitted. Now, if the appraised value is not adjusted up to at least the sales price, then the buyer and the seller have 3 options. Option number 1, they can cancel the sales contract, return the buyers their deposit, and the buyer will not purchase the home. Option 2, the sales price can be adjusted down to the fair market value on the appraisal, and the buyer and the seller move forward with the sale of the home. Option 3, the seller refuses to drop the sales price, and the buyer agrees to pay the original sales price even though the fair market value is less. Now note, if that happens for option 3, the buyer's loan to value will be based on the fair market value on the appraisal, which is lower, not the sales price. So the buyer's going to have to make up that difference with a larger down payment to keep the loan to value the same. For example, if you're purchasing a home for $200,000 and it only appraises for $195,000, if the borrower's putting down 10% originally, they would have been putting 10% of the $200,000, which is $20,000. Now, in order to keep the loan to value at 80% based off $195,000, they're going to have to put an additional $5,000 down. So now their down payment is $25,000 because the loan to value is going to be based off the lower appraised price of $195,000, not the sales price of $200,000. So that is important to note if you do go with option 3 of paying a higher price than it appraises for. Now, if you have any questions about home appraisals or need any help with a mortgage pre-approval or getting qualified, love to help you out. Give us a call in the office, 302-703-0727, or go online, PRMI loan application.com.